Hello there, this is James and you're watching Tixee Live, and a very good morning to all of you, and all of you a very happy Monday. In today's program, I just want to have a little chat about how I think the market is getting a bit ahead of itself after the better than or softer CPI reading we got last week. But before I get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So basically, the market has been having a really nice bull rally since Thursday. Obviously, since the US CPI came in year on year at 7.7, and the core came at 6.3, the market's got very excited that eventually we might start to see the Fed slow down. However, as usual, the Fed has said, do not get too carried away. In fact, we've had two members of the Fed speak out. First of all was Christopher Waller. He bursts the bull's bubble because basically what he said the markets are way out in front, and rates will not fall until there is a clear, strong evidence that inflation is indeed falling. He then went on to say, don't get carried away over just one data point. As well as that, Mary Daly, also a Fed member, she says, stop thinking about the pace of rate hikes and start thinking about the level. Now, don't forget, in the FOMC press conference 2 weeks ago, Jay Powell, or Kapow, as I call him, he said that they might have to raise interest rates higher than they originally anticipated. And so far, like I say, Barclays says 5.25, Bank of America 5%, Goldman Sachs is 5%, JP Morgan thinks 4.75, and Morgan Stanley thinks 4.75. So they're not going to slow down, they're not going to stop raising interest rates. They did hint, however, of doing a softer rate hike in December, maybe only 50 instead of 75, but they're not going to stop. And I think the market has got itself really carried away. ING thinks the same. They said we can now expect a period of elevated market sensitivity to Fed speaks. They go on to say, as investors will attempt to gauge which members have been convinced to press the brakes on tightening from the latest inflation figures. However, they went on to say as well, we think it's premature for a sustained dollar downtrend as a Fed pivot is not given yet, and risk assets continue to face a variety of headwinds. I couldn't agree more. Just because we had a softer inflation reading, 7.7 year on year and 6.3 on core, they are still very high. Don't forget, the Fed's target is 2%, and we're miles away from that yet. They're not going to stop. Plus, don't forget, we are bordering on economic issues as well. Recession is still being talked about. So even though they might start doing lesser rate hikes, doesn't mean they're going to stop. Doesn't mean they're going to start reducing interest rates either. So we are getting ahead of ourselves on just one bit of good news. But anyway, for now, the markets is having its best week since June. But this all relies on one other thing, which is happening this week, which I want to talk about. The retail sector. And the retail sector this week is going to be key to keep this happy feeling going. Walmart, Target, Home Depot to reveal their Q3 earnings this week. And don't forget, in quarter two, Target was devastated. Their earnings was way below anticipation, and that spooked the market. So did Walmart as well. Okay, so we've still got a lot of headwinds ahead of us before we can really start rejoicing. As well as that, US retail sales is due this week at 1:30 p.m. UTC on Wednesday. Expectation is coming at 0.9%. Previous was 0%. So they are expecting growth in the retail sector. And like I say, this happy feeling the market's currently experiencing is all going to be down to this. But let's have a quick look at the markets as they stand at the moment. Starting off with the euro, way above parity. They really are getting carried away. Oh, thank you very much. Hello, Moses. I hope you're well, and I hope you're having a lovely day. I really do. I really do. Thank you for all the emojis. Like I say, it is above parity. Currently trading at 1.0292. That's the key level there at 38.2, which is just above 1.02760. That's a key area of interest for me. The cable as well, experiencing a very good mood at the moment as well, all down to this CPI reading. Currently trading at 1.1764. Key area for me with the cable, realistically, is definitely going to be the 119 level if we can keep momentum and keep the bullish feeling. So anyway, that's doing better. Gold is actually off a 2-month high. 2-month high, doing very well, my beloved gold. My beloved gold. Currently trading at $1,755. Key area for me is 1,772. Key potential support at the moment is $1,726 an ounce. S&P 500. Also, like I say, still having a happy feeling at the moment. Above that 100-day moving average, which I think is a key area for me, around about 3,898 points. So that's how the market stands at the moment. But like I said, I do think in some ways the market is getting ahead of itself because nothing has changed. Inflation has come down slightly. So we are seeing that it is having its impact, but it's not coming, 7.7 is nice, but the core is still 6.3. That was only what it was 2 months ago. So we are getting ahead of ourselves. Anyway, something else I want to talk about is, of course, what's happening on Wednesday, which is the next episode of Tixee Live Presents Trading School. And let me just give you a little teaser for that. I'm a big fan of the Elliott Wave theory as well, by the way.
Let's go.
Very big fan.
I traded the DAX in the morning. Showed some really good signs of volatility as well.
Anyway.
Join James and Stephanos every Wednesday at 1800 UTC for another lesson at Tixee Trading School. Your key to a better understanding of the financial markets.
Well, there we go. The next episode of Trading School, of course, is on Wednesday at 6 p.m. UTC. Today's episode, or Wednesday's episode, will be Understanding Chart Patterns. So please come along and join me for that. Remember, this is a live broadcast, but you do have to register for it. It's not on YouTube. The link in the description below can get you registered to the next episode. So please come along and join me for that. Other events happening this week. We've got UK claimant count, UK unemployment rate, EU GDP, German zoo survey, UK CPI, UK PPI, UK CPI would be interesting. I wonder if it's about 11% now. US retail sales, like I already mentioned, CAD, CPI, ECB Langard speaking, Australian unemployment rate, US building permits, US initial claims, and UK retail sales. So a really busy week ahead of us. The market, as it currently stands, FTSE in the green, 0.41%. DAX currently trading in the green, 0.22%. And Eurostoxx 50 currently trading in the green, 0.21%. Don't forget, you can ask me questions anytime you like this young person has here. Hello there. Happy Monday to you too. When is the next US interest rate decision or interest announcement? Is actually in December. That is when they're expected to raise by 50 basis points. So it'll be December, be the next one, then followed by January. Hello, I hope you're good. Don't forget, you can ask me questions anytime you wish, or simply say hello, like Moses did, with lots of different emojis, which is very nice. Not a problem. Not a problem. If you think of a question later, you can put it in the comment section, either on YouTube or on Facebook. I will see them and I will reply to them next time I go live on air, which of course will be later this afternoon around about 3 p.m. UTC, discuss the US session. Okay, if there is no questions, not a problem. Don't forget, if you're watching me on Facebook and you enjoy this little video, by all means give us a follow. If you're watching me on YouTube and you enjoy this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video, find it interesting and useful, give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever shall be taken as financial advice. So I always suggest you do your own research and do your due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.